Welcome to another episode of Okcoin Live. I am Samuel McCullough, one of the hosts this week. I'm also joined by one of my favorite people, Alex, second only to Mandy, who is, pretty amazing as well too, and just also, I don't know, maybe a better co-host. This is like a thing that we're having now, and
I lose my job and then I gain it back, and I lose my job and then I gain it back. I'm gonna put myself once and for all. Mandy, sorry.
I know. I just, Mandy really brings the heat every time, and it's hard to. She's like the GOAT co-host. So it's like Michael Jordan
Mandy's
versus
50%, so it's not fully fair, But I'm trying. I'm trying really hard here.
Well, this week, this week we're joined by Micah Ippolito, the CEO of Blockworks, and he's joining us today. And we're going to talk about narratives and trends across crypto. So, Michael, thank you for joining.
Thanks, man. I thought, I'm not going to lie, when you said one of my favorite people, I thought I was going to get that moniker. So my heart.
Do you know how hard I had to work for this title?
It's like years in the making, I can tell.
And only to be one of the, by the way, not the, but just I'm just among the group, basically. That's what's happening.
I could never take that away from you. I could never take it away. So yeah, I think everything is in its right place. Honestly, it feels good.
Yeah. So it's been a fun month. I mean, this is February 20th, and been some really big stories this month. Other than the, what's happening in Eastern Europe and in Canada and all across the world and China, and just a ton of news out of everywhere. And so today we're going to cover some of the broader topics and narratives that have been in the crypto news and headlines. And Mike, you're gonna help us run through those.
Sure thing, man. Where do you want to start?
Well, what's kind of like the biggest, other than what's been the biggest kind of trends and topics for the past month? I mean, just in your opinion and kind of what you've seen on the site.
Yeah, sure. So, I mean, I think maybe one story to a larger trend is what's going on in terms of stablecoins. So you actually saw $1 billion, let's call it raise from LFG, the Luna Foundation Guard. And that is to $1 billion in Bitcoin, which is going to collateralize their stablecoin UST. That's really interesting to me because I think stables are probably one of the more interesting spaces in crypto. It certainly has been a great last 2 years for them. I think they've grown from like 4 billion in terms of market cap to, I don't know, they're sitting around 150 billion in terms of market cap today, which I think has caught a lot of folks by surprise. What's particularly interesting in terms of, let's say moving forward is you kind of got two different classes of stable coins. You've got the regulated, fully collateralized with dollars, right? So that's like your US. You're also seeing this emerging class of decentralized stable coins, right? So that's kind of your Terras. So what's interesting about that is that, if what we're doing here in crypto is building an alternative financial system, you'd ideally want something that, exists purely on crypto rails. So you've kind of got two different models for decentralized stablecoins right now. You need reserves, which back the stablecoins, and then you'd actually need demand for the stablecoins. And Ohm is a really good example of starting with the reserves. So Ohm basically said, what's a really good way for people to aggregate deposits here that we can use as collateral for our stablecoin? And what they came up with was, hey, if you put stuff with us here and we keep it in our treasury, we'll give you a bunch of these coins moving actually. But it was super reflexive on the way up, super reflexive on the way down, and they never really had demand for people using the stable. Mm-hmm. What's really interesting about Luna or Terra is that they actually kind of went about it the opposite way. They started with demand. So there was like a payments platform over in South Korea called Chai. They actually gave discounts and stuff to bootstrap demand for the stable, and now they're collateralizing it. I don't really want to get into too much of the specifics here, but basically right now it's collateralized with Luna. And now they're experimenting, and this is the first successful step of getting other collateral. So Bitcoin, they haven't announced this, but I wouldn't be surprised if they went to ETH or other crypto native collateral to just defend the peg, right, of UST. So it's a huge testament to what they've done, what they do next.
Yeah, and it helps me shore up a bit of my skepticism about Terra, because I was farming with UST back in April of this year, and everything was going fine. I had funds on Curve, and then all of a sudden Luna fell off the cliff. It went down by about 75% in about 3 weeks. Peg broke, and I was actually a little bit scared at the time because the peg broke about 6 cents down to 94 cents, which is for a few $100 million or $1 billion of assets at the time. I mean, that's a lot, especially when you're talking about stable. I just didn't touch Luna anymore. And there's other stablecoin options like Frax or DAI or other things that could provide decentralization, but just didn't have that sort of peg risk that I thought. And this backstop that's there now is actually really cool. I think that it helps kind of alleviate some of the issues that I had with Terra. And I don't think fully believe that you're always going to have like a gigantic backstop here in order to defend the peg when these sell-offs happen. But at least there's something there if they need to use it.
Yeah. I think for listeners who might not be aware too, like the reason why the reason why some folks work peg is because Luna is what's collateralized UST, the stable coin. And there's a swap option, right? So you can, if you're ever worried about the peg not holding, right, what you can do is redeem one UST for $1 in Luna. But then what happens there is it gets minted. So the reason you might be concerned about the peg is that the value of Luna is falling. The whole system is less collateralized. You could, swap from UST into Luna, bringing more supply online. And it's this kind of like death cycle. So the idea of having more types of collateral in there is actually really, really, so now you can swap for $1 of UST into $1 of Bitcoin. I think it's still a little bit a ways from perfect just because Luna and Bitcoin are probably still pretty correlated, right? So if Luna's falling, odds are Bitcoin's going to be falling definitely into the future, but at least for the time being. So yeah, but I think it's a tremendous step in the right direction. Super exciting.
So, hey, I actually have a question on this. So we talked about the fact that they went into Bitcoin and you speculated that they would back it with Ethereum as well. But the correlation is there, right? So on the way up, it's great. On the way down, maybe Bitcoin won't fall as much, but it will fall. So do you ever see some of these crypto native stables going in and actually buying, kind of like USDC does, treasuries, maybe like US treasuries? Or, as I'm kind of asking the question, maybe it's a question for all of us to discuss. I wish there was a synthetic of a US treasury, a native synthetic, where you are able to actually really hold the peg, right? Because otherwise you're just money managing the different assets into the peg. So maybe this is DeFi 3.0.
A synthetic version of a treasury exists. It goes through Arca's hedge fund. Yeah. I forget, basically an on-chain synthetic is pegged to the treasury. So pretty cool.
Why isn't it used more? Do you know?
I don't. It actually might shock you. Maybe there's not as much demand for treasuries among the crypto native degens as you might think. But I think it's a fantastic product, honestly. I haven't used it myself, but yeah, makes a lot of sense.
But for the peg, for sure, we all hate treasuries, government debt, blah, blah, blah. But for the US dollar peg, it's kind of the ideal instrument, right? Everything else is money management, which actually brings more scrutiny to stables from a regulatory perspective. So it's almost this devil, right, of regulatory scrutiny. Not on the upside, it's great, right, because you over collateralize and it's all good. On the downside, this is where I get nervous about some of these stables that are, either the automatic stables or ones that are not pegged by treasuries. Whatever we think about the dollar, if it's a dollar-backed coin, treasuries and just roll them.
I wonder if Gensler will be looking at this Terra thing, because essentially now the price of Terra is now supported by a group of private investors and not the protocol itself, right? So you have Jump Crypto, Three Arrows Capital, and like Defiance Capital, GS private firms essentially holding up the value of this stablecoin, which in theory could make it an investment product because its value is dependent on the effort of others. But I'm not a lawyer and I don't want to have the chat, but it's just something to think about where like the more that we get towards these larger stable coins that need to be able to hold the peg, they have to mimic of what the existing central bank structure does, where the central bank's job is to hold the peg in money markets, the same that these guys are doing with their $1 billion raise, and just in different ways, right? Well, they in how they support it, but they have collateral backing that then provides the ability to support money and banks in case there's any sort of volatility events that happen.
Yeah, I think, stables, they definitely seem to be in the regulatory crosshairs. And I think there are a couple of different bodies to just be aware of. Again, not something I'm an expert on, but I think you should be keeping in mind the SEC, and I think you should be keeping in mind the Treasury. So Gensler a little while ago, I mean, he's been doing his like rough cop on the beat thing for a little while. I think I saw like he called a bunch of these things securities, right, in like a private meeting. But one of the interesting phrases that he's used to describe stable coins are stable value coins, and a lot of people think that's an allusion to stable value jurisdiction over it. What it seems like to me from an outsider's perspective is that there's jockeying kind of internally within the regulatory apparatus of the US. It's like, who has jurisdiction over what, right? That's what it seems like. People are kind of staking out their territory and claim. I think, I've also heard rumblings that, Treasury is extremely interested in stable coins in general, because again, high strategic value of the reserve currency, right? We have a tremendous amount of huge political privilege and geopolitical control to be able to be the issuer and to invoke sanctions, right, on foreign countries. And I think they get nervous when you see something like stable coins, because they see their control loosening, essentially.
Yeah, I think it'll be interesting going forward to see how private acts who have signed up to hold the peg versus other projects like Frax, where you have everything is held by the protocol and can only be used or delegated from the protocol itself making decisions. So in one hand, you have like a centralized group of people supporting the peg versus an actual decentralized protocol that's making all the decisions about stablecoin system that they have.
Yeah. I can't really speak to the governance, to be totally honest there, but I'm sure like most of these protocols, they kind of start as relatively centralized, and then they have plans to decentralize the decision making.
It's probably worth noting that like $1 billion is probably not that much for the funds that put in. So so Jump Crypto was the fund that stepped in for the wormhole hack and made right $300 million essentially within a few hours. So I'm sure they have a lot of capital. If they're able to plug a $300 million hole within 4 hours, and $1 billion probably isn't that much in the whole swing of things.
It is for me.
It is for me. Yeah, it is for the rest. I mean, for the rest of us, yeah. I mean, you want to throw me a cool billion of ETH, and I'm not going to say no.
I'll take it.
A cool billion. I'll take 1 million. See, I'm a much cheaper price than you. No, I love. I just have one point on stables, and we can move on or discuss if you guys want. But most of crypto out there, right, is traded into USD or USDT or USDC. But the point is, it's the US dollar. And so it's a lot of these government bodies that take a very short-sighted view on stables. Yeah, there might be a central bank digital currency, but there are many arguments even within the Treasury or the Fed or ex-governors of the Fed, where all a CBDC is technically doing is providing fast payment rails. Within the US, we already have fast payment rails. That's not the problem that we need to solve. We have Venmo, we have PayPal, we have banks, and so on and so forth. Now, it's an old system. We can talk about ACH issues. I get it. But in the US, Venmo works just as well as anything else. So we don't necessarily need a CBDC. But globally, what a CBDC does, or a stable coin, is it actually exports US values without bloodshed. And so we're recording now. There's a war between Russia and Ukraine, but it's one way of actually getting people to buy dollars in countries that have capital controls, and therefore exporting our values. And I think it's a very powerful framing of the positive, right? I think a lot of regulation comes at it from a negative perspective. What can I do? What control we're going to lose, instead of embracing some of the positives and saying, what can this actually bring us? How do we use this strategically? And I'd love for people to start thinking about stable coins as a way to export kind of freedom, democracy, and so on, at least the US values, to the world, where otherwise people wouldn't have been able to get it. Because once people are tied into the US dollar and they're tied into the US economy, they're going to want it to succeed. And we have our own bedrock of values and frameworks that work for us.
I agree with you. I would just make one, I think, pretty important distinction there between
Sure.
CBDCs and stablecoins, because
For
I think
sure.
stablecoins can proliferate without it necessarily having to be the liabilities of a central bank, which is what a CBDC would be. And I actually see a tremendous amount of problems with a CBDC domestically. So I would just say I completely agree with you. I think long term, and I think I have a lot of faith in the US. I think despite all the crap that it gets, I think we've got a decent right decision here. Because I do think stables are really good for dollarization of the world, but I would come out against CBDCs as a good idea.
No, but I'm on the same page as you. I don't think
too.
CBDCs solve anything. That's what I'm saying. I don't think they solve anything. The stables actually solve the main problems of payments, quick digital payments. That's not a problem that we have in the US because we have all, but globally, this is what's come in. So agree to agree.
Yeah, I agree as well too.
Love
I think that the issue, and especially like we've seen this week, I mean, the CBDCs allow for politicization of money, and we've seen that to great effect with what happened in Canada, where
Tell us more. What happened in Canada?
Well, with Trudeau, which allowed him to freeze the accounts of anybody taking part in what they deemed as illegal protests, which is very worrying because
people donating, by the way, to the protest.
Right.
That's the crazy part. You donate. There was a story about Miami. It's an anecdote, but a woman donate $50 or a concert frozen. That's just like mind blowing.
Right. So typically, at least in the United States, I don't know, I'm not in the United States. In order to shut down somebody's account, you typically have to go get a subpoena. There needs to be criminal charges involved or some sort of malfeasance that the government is showing happen. But in this case, all they're saying is that the banks should be proactive in shutting down accounts, and there will be no legal liability for them, which is almost antithetical to what it is to live in a free society. The big reason that we all probably got into crypto is its ability to bypass capital controls, be able to put 12 words that control $1 billion in your head and walk across the border somewhere else, and also not have any of your assets seized from governments that are engaged in overreach. So I think this is a big wake-up call to a lot of people, because we've seen financial repression and oppression all across the world for many different years, but we just haven't seen it to the extent that it was executed with in Canada this past week. And I hope that it's a big wake-up call for everybody to say that, in your bank account is just an IOU. It's actual money. It's a debt that the bank owes you. And that means that it has different rules and regulations, and they owe it to you, or they potentially owe it to you to give it back to you. It's not actually yours. So yeah, I think that in itself hopefully will be a huge wake-up call for people about whether or not to dip their toes.
Yeah, I think overall, the way that I would frame this is that within international relations, it's actually been explicit policy to freeze people out of the financial system for a long time. It's called sanctions, right? When countries are doing something that the US or a combination of our allies, the United Nations, NATO, whatever, doesn't, sanctions will get levied, and that typically gets enacted through the global financial system or something like SWIFT, right? So as we're speaking today, there are huge calls. Boris Johnson has called for the complete exclusion of Russia from SWIFT, the SWIFT international banking system. What we're seeing in Canada, the reason why it should be concerning is, I always try to frame this with the truckers. It doesn't, the point here is not to look at it through, do I agree with what the truckers are protesting for, right? It's, do I agree with the government's ability to unilaterally and without any due process freeze people's bank accounts and limit their ability to transact? And what I would actually point out to you and say is that this has actually happened in the US. There's a 2013 DOJ joint operation called Operation Choke Point, where they essentially froze out, at the urging of the Department of Justice, industries that people didn't like. And they're industries that nobody's going to stand up for. It's like ammo manufacturers, like payday lenders, pornography, etc. They essentially froze them out of the banking system. And it was a genius idea because no one's going to stand up and say, hey, I actually want to support the payday lenders here. But what they did was they essentially deplatformed all of these industries from their banking, not by going through rule of law, right? Or the process that we have for saying as a society, hey, I think this industry should be allowed to exist or not. And whether or not you agree with whoever is being frozen is a system that specifically the US has tremendous control over, and we're abusing that right now. So there's only so often that you can abuse the system and say, hey, we're going to cut Russia off from the financial world before people don't like being cut off, right? A lot of people, even our allies, are looking around and saying, I don't like the fact that you can just unilaterally, instantly cut me off from the financial world. So like a really interesting signpost was there's a 30-year deal for oil and gas signed between Russia and China, settled in euros. And the reason that's an interesting signpost is historically that has always been settled in dollars. And people are moving off of the dollar system because they are sick of getting frozen out. We have a tremendous, we're abusing the control that's happening internationally in the form of sanctions, and it's happening domestically in the form of bank accounts now. So like that's a huge thing that we're going to have to contend with over the course of the next 10 years, 15 years.
Yeah. I mean, I always come back to the point that, all the Bitcoin network is code, and the publishing of code is essentially an action of free speech. And so when you're broadcasting transactions, Bitcoin transactions or crypto transactions, it's an act of free speech. So if you're for censorship of any sort of value transaction, it is a free speech issue of not being able to transact and being able to broadcast code into the network. And so like for this, with what we're seeing in Canada, it's really important to understand that, the whole idea of, like not your keys, not your crypto can be broadened out to whatever kind of assets that you're holding in a financial institution, right? If it's securities or in a bank or anything else. I mean, you don't control those assets. Some custodian has them, and then they owe an IOU to you. And hopefully you get them back when you go to the bank. I mean, that's kind of the implicit agreement that has been set up between the bank and the government, and then the people who use it. I think there was a wake-up call, but there was a bunch of good things that came out of this whole Canada situation. I saw a Twitter post from someone who had collected 14 Bitcoin and had gone around and distributed to, I think, around 100 people, just P2P, just had them download a Bitcoin wallet, and then was just giving them Bitcoin to help them out with their finances. You also saw, I think, Michael, you were talking about it before the show. You said it was like Tallycoin came in and was able to raise some money. But what happened with that? You mentioned that there were a couple of people who had their accounts frozen as well too, just for being one of the signers on there.
Well, so if you remember the sequence of events for the GoFundMe campaign that raised over $10 million to be donated to the truckers, I think $1 million of that was dispersed. The Canadian government essentially called up the CEO of GoFundMe and said, you're going to have to come testify in front of Parliament about why you're funding this group of people. GoFundMe said, oh, you know what? We don't want any of that smoke. So we are going to go ahead and pause the campaign. The most ridiculous thing, and I think why this took off so fast, is they actually said they weren't going to return the funds to the people that donated. They were going to donate it to a charity, which is bananas. We never got a great explanation for that particular decision. But that kind of kicked off alternative sources of funding. And there's a crypto native one called Tallycoin that raised a bunch of funds. There's a multi-sig wallet that the funds went in. And there are a couple guys that just came on, actually on the margin, the podcast that I host, to talk about it, Greg Foss and Jeff Booth, and their wallets basically been flagged to the RCMP. And I haven't heard much info there, but those guys are great guys, very high integrity. I'm sure nothing horrendous has happened to them, but I hope to God it hasn't, because they certainly, but I think it's, Bitcoin's role in this is interesting. I think it's just going to be a check on governments around the world, I think, is if you think about what a dollar is, it's a liability of a commercial bank, and then commercial banks and central banks are very closely linked.
Mhm.
So they just have much more control over the issuance of those currencies. Bitcoin is just outside of that system. Could you haul up people and like threaten to like rip their thumbnails out unless you gave private keys? Like, yeah, absolutely. Would it work? Like, yeah, probably. But the point is you have to take more drastic action, and then that's not sustainable over a long period of time unless we're going to all devolve into authoritarian. So I think the way that I at least look at Bitcoin in these situations is that it's a financial system that they have less direct control over. Does that mean that they can't get involved in that system? No, it doesn't. But it just means it's harder. It means they have to take more blatant overreach and they risk more pushback. So that's my overall framework for it.
Right. And
So
if
by the way, this is why I'm well manicured. Nobody can take my Bitcoin away.
Yeah. If I'm going to get my nails pulled out, I at least want them to look nice.
Hey, you lean into it,
Right. Exactly.
And again, it comes back to, you can throw 12 words in your head and put all your Bitcoin, walk across the border with zero belongings and reestablish yourself in a different jurisdiction where there's less financial repression and oppression, and essentially set up shop with no problems, no issues. And that's not going to change for Bitcoin. That's one of its biggest selling points, and things that I love about it.
Mm-hmm.
Yeah. Because I know
Let's do another story. I know we're doing a lot of Bitcoin.
Yeah.
I mean, what you tell us? We've been picking stories. What else is we talked about Canada, touched upon Russia, Ukraine, talked a lot about stables, talked about Bitcoin. I mean, I don't know what's next. What's the price going to be of Bitcoin in 20 years from now? On February 25th, 2042.
No, let's go. So like,
it's above my pay grade.
So what?
You know what? Dow Hacker story. We haven't talked about that.
Yeah,
let's do that.
Yeah. So for those of you who don't know, a little bit of background about the Dow, right? That was originally basically an on-chain pooling of funds on Ethereum, and people are going to be able to vote on funding new projects. Forgot how much money went in there. It's a lot.
150 million at the time.
150 million at the time. And essentially a hacker found it very controversial at the time because Ethereum, the community decided to vote and do a hard fork. So we hard forked to a place where the funds were essentially returned. That's Ethereum that we know. But there's actually pushback, and there was a chain, the original Ethereum chain, which is now Ethereum Classic. Kind of like it's a very interesting moment in crypto's history in general. But there's a journalist, Laura Shane. Got to give kudos to her. Apparently working, she's writing this new book, and she found out the identity of the attacker. It's this guy named, allegedly, Toby Honish. I'm not sure if I'm pronouncing that right. But it's like, I mean, it's kind of interesting because it's an interesting piece of history, but I think it also calls into question the idea of, to your point, about free speech. I think it comes to the question, the idea of anonymity in crypto, right? There was the whole Danny Sesta Wonderland, kind of debacle that happened a little while ago. And I think folks are figuring out that right now, there's definitely a huge amount of benefit to anonymity, but also there are probably limits as well.
Code is free speech, right? And I'm really, I harp on this. If you go back to way before any crypto existed, but there was actual encryption wars that happened between open source coders and developers and the United States government. So PGP, which is one of the base ways that people encrypt messages. So I can the way it works is that we both have something. I send it to you. You can use your signing key to unencrypt it and then watch it, and then read it. This PGP encryption was classified by the United States government as like something pertaining to like war materials, and fell under international export controls for years and years and years and years, up until like the 1980s. And it was only when somebody actually went and printed out the source code for this PGP material and brought it to the court, like a book that was like this big. It was like 10,000 pages of documents for the source code, and gave it to the court to enter it in as public. Banned books. This is like, if I take the code and print it out, like piece by piece on a piece of paper and then submit it to you, you're not going to ban that. So what's the difference between that code existing on a computer somewhere versus me printing it out and having it? So the same could be applied to like the Bitcoin blockchain, where you could take all the different transactions and all different hashes and everything else, print them out, and still run the blockchain at using paper or whatever if you wanted to, and operate it that way. And there would be, like, from a court's perspective, or at least from the legal perspective, I don't think they see much difference between that. At least that's the way that I understand it. But when it comes to the Dow hack, I think the most interesting thing is that the headlines for this story led with $8 billion of Ethereum, when in actuality, I mean, they forked to Ethereum Classic, and the guy ended up probably with what, like $50 million, $60 million at the end of the day.
Yeah, I agree. I think it was maybe a little bit misleading there, or risking being misleading. Because he did not successfully extricate $8 billion from the system. But
yeah, I think also the interesting thing that came from this story is that Chainalysis is able to see everything, no matter what you do.
I think that is too.
And also tied in with the other, with the Bitfinex hackers as well too. Like, unless you're, nobody seems to be able to launder any of these stolen funds. The Bitfinex guys had no idea what to do, and it looks like Toby had no idea how to launder it. He tried, but he went through a couple of exchanges. He was doxxed just from some really simple mistakes about his emails and other stuff. And eventually he put it into some privacy coins, but the trail had already been like led up to him. So
I see it as a huge positive. By the way, maybe we disagree here, but it's laundering a huge amount is quite hard. I mean, or so I've heard. And so it's actually a big bull case for crypto.
Yeah.
The whole case of, criminals use it, is just complete bullshit now. Right? Like we've seen over and over and over that it's anonymous book ledger. And so the more of these things, like I'm in the camp of let's get rid of the FUD, get rid of the criminal FUD, even though it's going to come up. We have big cases of get rid of the negative and prove the positive. Criminal FUD gone.
Yeah.
Mining tied to China FUD. Next is ESG, which is coming up in the US and in Europe in some bills. Hopefully you could see through a network that most of it is actually using renewables, or 50% or whatever. That's going to be gone. Then you prove the positives. Canadian government proves the positive, right? And then hopefully some other things, like if we have persistent inflation, which I know Sam and I sometimes disagree on the level of the persistent inflation. And I really hope that the reason why I get excited about Bitcoin specifically, crypto and Bitcoin specifically, is that I kind of feel like the people that are we see the world where it's going, and there's a lot of game theory assumptions, and these things are just proving to be true. The negative is proving to be untrue. The positive is proving to be true, and it's kind of fascinating to see the world unfold and explode, and then people truly see the benefit of Bitcoin.
Mm-hmm. Yeah, and it's going to be good going forward, knowing that. Well, I personally know that it's almost impossible for someone to launder this stuff, because they're going to make one mistake. There's going to be like one.
So you personally know?
I don't personally know, but I understand.
Now you know the friend that was asking
slip
more,
of
Mike.
the tongue, slip of the tongue, my man.
One mistake.
One mistake. It's like right. One mistake, like talking about it on a podcast. One mistake.
Like for law enforcement, all they need is like one clue to, and that's what happened with this transaction. There was like one transaction that led them to Tobias. There was like 2 or 3 transactions that led them to the Bitfinex hackers.
Like Mike was chatting Bitcoin to launder money. The real money, when real money comes in from Wall Street, it's not to launder money. It's to hold on to an asset that has value, or speculative asset that's going to go up in value. This is why criminal laundering, it's just so awesome. Mm-hmm. Plus you have elliptic. plus you have Chainalysis, plus you have all these other companies, and the FBI and the NSA surely have groups that are looking at this. Like it's a transparent ledger at the end of the day, and you can triangulate IP addresses. There are many ways that they can find the people. So it's probably the worst way to launder money.
Probably the worst way to launder money. I agree. Yeah.
Yeah.
Just don't try it.
I think it is really
Looking at you, Mike.
Yeah. I just think I think it is interesting because to your point, I mean, you can't get significant amounts of money outside of crypto in general. Like it is really difficult to do. It's funny, I had the exact same thought actually, that Chainalysis. It was like, wow, this is some kind of interesting branding for them, because on the one hand, it's like, cool guys, you have some really great proprietary tech. On the other hand, crypto people have libertarian bent. They really like their privacy. So on the one hand, it's like really good PR, and then like depending on who you are in the space. But yeah, I kind of had the same takeaways as you. I just think, because there are just the one thing I want to say about code is free speech. There's a limit to free speech too. You can't yell bomb in a theater. So at the end of the day, like, we don't really want to encourage a system where you can fund like pedophiles or terrorists, right? Like so I think there had to be some like logical limitations in terms of privacy. So
I think it's a bit heavy to to get towards. Let's wrap up with something kind of lighter for this week.
I know it's gonna be.
What's happening in the world of NFTs?
All right.
Did not know it was gonna be that.
Yeah. Well, I mean, there's a story. So Blockworks reported on it, and our NFT reporter Morgan covered this. But basically, there was going to be a huge collection of punks that was going to be auctioned off at Sotheby's. But then the auction canceled the sale, so they actually rugged Sotheby's. They tweeted, NVM decided to hodl. I mean, there's 104 different punks. This was supposed to be like theoretically a very large sale. The sources that we talked to, and what my own personal speculation is, I don't know this for a fact, is that they probably weren't getting the price that they wanted, right? So NFTs are like this really funny corner of crypto where gravity just hasn't kicked in for whatever reason. Like everything else is down across the board, 40 to 75 to much worse percent. But the NFTs are just kind of hanging in there. I think that says a tremendous amount about the potential for NFTs is what I will say, like a huge amount about just where the market is going. But maybe there's a bit of a dislocation there in the interim.
It's probably just prices. I looked at the floor price today, and it's down to like 60 ETH or something like that, which is pretty low. They were going for a lot higher.
What did it get up to?
60 ETH. No problem.
Right. Yeah. Pennies for us, ETH King. No. What was the floor price at one time for ETH?
I think it was up at like up to like 150.
Wow.
200.
1 million billion ETH for this CryptoPunk.
Mm-hmm.
What about Bored Apes? How are they holding up?
Let's see. The floor is 81 today for the Bored Apes.
What an unbelievable runaway project they've been.
I know.
I'm rooting for those guys.
Do you have
I'm rooting for them all.
Do you have anything that's coming up? Have you heard of any projects that are coming up?
No, man. I'm not an NFT. I missed it. I've just been one of those guys on the sidelines being like, God damn, these JPEGs are ripping, but I just can't make myself get them. Just can't get in.
This should be the title of this episode. God damn, these JPEGs are ripping.
And everyone's going to go and we're talking about Bitcoin in Canada. They're like, where's the JPEG talk?
Yeah, this is old. They're going to scroll right to the end. We're going to make show notes and going to scroll right to the end.
Right to the end, yeah. Then you're going to be like, yeah, not happy. But
so the floor is actually $150 for the punks. It's on in dollar prices getting down to some of the lowest it's been in probably 6 months.
Well, yeah. Thank God, buy the dip, what a discount, 150K, no problem.
Right? Seriously.
Oh man. I think we need to go ask Mike for some hot tips.
Oh yeah. We got to do the Alpha 5.
Alpha 5?
Yeah.
What is this?
Oh, you weren't ready for this.
You're not ready for this.
Not, man. No, I'm worried. I'm terrified, actually.
All right. Okay. So these are going to be like 5 questions that we ask everybody that comes. and you can answer them in a very honest and clear and exciting manner for us to let us know how you feel about the world of crypto. So let's.
I'm afraid of what I'm going to say.
Let me just pull this up. Okay, so the first one is going to be the first of the Alpha 5. Where is the most alpha? Twitter, Telegram, or Discord?
Discord.
Discord? Seems to be a solid answer.
I mean, Discord's interesting because it's almost like the real time sentiment index from like contributors to. So I'm not. There's obviously some alpha that comes from Twitter, but yeah, I would say if you participate in the Discord, you're doing better than like 80% of the industry.
Yeah, and no Telegram there.
Yeah, I like Telegram. Most of my Telegram, I'm in some chats, but I just use it to DM a lot of people, honestly. Slide the DMs.
All right. Question number 2. Someone, friend or family, comes to you, asks you to help them invest some money into crypto. What kind of portfolio do you build for them?
Bitcoin and ETH, and then I say buy as much that if it went down 50%, you can panic sell it.
I like that answer. Yeah, seems pretty reasonable. Okay, what about hobbies? Like outside of crypto?
Golf.
Good.
Yeah. It's like such a lame white guy answer, but it's my hobby. I really like it.
I think it's a great hobby to have. You know, like it's something that you can continue into your like 60s, and it has even 80s, and it has like an infinite difficulty level that you can try to achieve.
Yeah, it would be cooler if I was actually good at it for the amount that I played, but I'm not. Yeah, TBD.
What's your biggest golf hangout?
I wish it just went straight when I hit it. Yeah, that's my one wish.
All right, what's the worst piece of advice that you can give to somebody getting into?
Okay, I don't know if this is the worst piece of advice, but this is the framework that everyone has coming into crypto. I've never been successful at dissuading people from it. They do two things. They wait. Okay, like let's say it's going up and it's at like 5,000. They're like, I'm just going to wait for it to go. And then they pick some arbitrary number. Like, I'm just going to wait till it dips till 40, then I'll buy it. And that's like everybody does that. And it's just a horrendous strategy because you won't buy it when it dips to 40,000, or it's just going to come screaming ahead and you're going to FOMO panic and, $20,000 higher. So everyone does that. And the other thing that, I've already missed Bitcoin. It's too expensive. I got to get something lower down. And so then what you end up doing is you'd end up not getting like Bitcoin or ETH, which are like good things to get your dip your toes in. And they end up buying these weird things because it's going to be like the next Bitcoin or the next ETH. So then you end up just YOLOing into shit coins and having a horrendous time when it inevitably blows up in your face. So yeah. That's not really advice noticed from every single person that gets into crypto.
Yeah, it's one of those things where people want to try to recreate the gains from ETH and BTC, but those are just the bread and butter. It's like mayonnaise and ketchup mixed together. You just can't beat it.
Fancy sauce.
Fancy sauce.
You can actually buy that in grocery stores now. I've learned.
Oh yeah,
Sir Kensington. Yeah, it's pretty cool.
Have you seen the new big trend of being anti-seed oil?
Yeah, I don't really get that. Is that bad for? I don't know. Is seed oil bad?
Let's not piss off our seed oil sponsors, because we have many of them. There's some very strong seed oil conspiracies out there that you should read.
I'll look into it. If it's bad, I'll cut it out, I guess. I don't know.
But
I'm a no oil kind of guy, or gasoline. It's just one or the other,
Yeah. Oh wow.
And then last, where can people find you? And
so you can check out our site, blockworks.co. I'm also on Twitter at Mike Ippolito, IPPOLITO _. I tweet. They're okay. You're not missing much if you're not following me. But yeah, check out our site or follow me on Twitter.
Blockworks has all the alpha.
We do.
Yeah.
Exactly.
We're,
Yeah.
no, sure. We're big fans. We listen to you guys all the time. I remember talking to one of your reporters, Casey Wagner, back in our New York event. I think, now 6 months ago. She's great. And so it's an amazing publication that you guys are doing.
Thanks, man. I really appreciate that. Yeah.
You should have said on the first question was the alphas at Blockworks, Discord.
Exactly. I got to save some alpha. Got into people over there somehow.
So wait, what's your podcast as well, too? Because I'll probably go listen to it after this.
Yeah. It's called On the Margin. So On the Margin is kind of, it's at the intersection of all things macro and all things crypto. So I do an interview once a week, and then my co-host is Mark Yusko. So we'll do a roundup that goes live on Saturdays.
Oh, isn't he a macro guy?
Yeah, he's a he really is a fund of funds. So Morgan Creek was a pretty famous fund of funds back in the day. He's big in like the endowment world, and Mark, to his credit, was like he was one of the really early institutional guys that moved into crypto. Morgan Creek, they've done a really great job. Also, just a great dude.
Follow him on Twitter. I knew he is. Yeah.
Awesome.
You said the name, and it immediately came to me who he was. Well, that's amazing. That's a great person to host a podcast with.
I feel very lucky. I feel very lucky. He graces me with his presence. I have a ton of fun with him, actually. It's like we record it once a week. We do it at like 8 a.m. on Fridays, and honestly, it's just a blast. I really have a ton of listeners too.
Well, cool. Alex, we killed it this week. You did a great job. Michael, thank you so much for coming on. This was great to come talk about some topics. We're going to make this a repeat thing going forward. So for everybody watching out there, we're going to have Michael back. Maybe some of the other Blockworks teams come on and talk topics. And thank you so much for being here on Okcoin Live, and we're definitely going to have you back.
Cheers, fellas.